We are going to have Michael Roberts speaking on economic crisis and long depression. So I'm not going to speak anymore. And Michael, start. Thank you.
Well, thank you for inviting me to speak at Marxist Festival again. And thank you for the turnout. It's excellent considering how sweaty and warm it is outside. Only revolutionaries would turn out on a day like this to discuss probably one of the most driest subjects possible. So that's very great for you to do that. And also you've got to bear with the fact that my voice is just about has been going in and out for the last 2 days and may well, particularly if there's a difficult question, disappear altogether. Having said that, then, let's proceed. I think in your timetable it said it was going to be about the world economic crisis, which it will be, but I've given it a bit of a different title. Is Capitalism Past its Use-By Date, which is actually the last chapter in my book, The Long Depression, which I try to sum up some of the themes ahead for capitalism. And I think this discussion should really try to look at the big picture, the big economic picture globally. I'm sure you spent a lot of time discussing all the key issues taking place in the British and Irish labour movement and the class struggle there, Brexit, and Grenfell Towers, and all the immediate issues which confront us in the class struggle, and maybe even looking at, to some extent every day, of what's happening with the British economy. But unless we take a wider picture, look at the globe, look at the trends taking place for the world economy, we will not be able to grasp what direction capitalism is going in and how to react to that, because it's a terrible thing to say, but Britain is quite a small economy and not that important in the wider spectre of global capitalism. Yes, it's the 5th or 6th largest economy in GDP, but when you compare it to the colossus of US imperialism or China, and even Germany in the case of Europe, it's not decisive economically, although it does play a very important role, British capitalism, in terms of global finance capital, way beyond. It's punching well above its weight when it comes to finance capital. That's to its advantage as a rentier economy, but also to its disadvantage when things go wrong, as we see at the moment. But let's just start at the beginning. I want to say that the book that I wrote was published just about this time last year, after much blood and sweat, and that was mainly with the publisher, who doesn't seem to ever get on with it. Anybody's ever tried to write a book, or even sometimes an article in a journal, finds how long it takes to get published. But so it's a little bit, even then, it was starting to get a little bit out of date, and now a year later, it's worth considering what it needs to be in terms of updating what's been happening in the last year globally in the world economy. Now, let me start with the main theme of the book, which of course is that I argue that the world economy has, since the end of the Great Recession in 2009, has been in a long depression, which I define in the book as where growth does not recover to its trend before, and in fact it sustains a way below level of growth in all the major economies, and that means also in income and investment. Now this is a 10-year rolling average of the GDP for the major economies. 100% would be the trend running across that, starting in 1970 up to the Great Recession when it collapses. As you can see, since then, the 10-year rolling average as a percentage of the trend before that is way, way below. It's the first graphic illustration of what I mean by this current position, the long depression that we're in. And if we look at the next graph, we can also see that the ability of capitalism to exploit us effectively, get more out of us as a workforce, increase labour productivity growth, has been declining significantly. It's still growing. Productivity is still just about growing in all the major economies. But as you can see, after the Great Recession, the ridiculous collapse there, then return, that on the whole, the trend has been down actually for the last 30 or 40 years and continues to head almost to zero. So there's increasingly, capitalism is finding it impossible to develop productive forces, however hard they try to exploit us. And we can also see that in the case of the US. US real GDP growth rates over a long period, since 1967 in this case, you can see there's a 20-year moving average. We economists like to use 10 or 20-year moving averages because it takes out all the ups and downs in it. Of course, it's also very convenient if it looks the way we want it to look. And if we did something different, which I could do, then we might get a slightly different result. But I still think it shows that the trend, the ability to develop the productive forces in the major economies is being weakened. And we can see the key factor behind this low productivity growth. This is a very recent report from the IMF, in which they show, or the World Bank, sorry, which you show on the right, investment growth in the major economies and the emerging economies, the advanced economies. That's the black line. You see that investment growth has recovered, but it's nearly where it was at 5% at the beginning of the 2000s each year, investment growth. It's now around about under 2%. And even the emerging economies, the great success story of capitalism, the big economies, we can see that investment growth is declining sharply. And if we look on the left-hand side, we can see that factor productivity growth, that's the ability of economies to innovate and use all the new innovations to raise productivity growth. That's also declined from the 1990s, the black line. Then we get the period 2001 to 8, where it appears to make some progress in the advanced countries. That's the black dot you can see. On the whole, the black blocks on the advanced economies are always going down, and in the latest periods they're even lower than they were in the period 2001-8. Now, about autumn last year, the Organisation for Economic Cooperation and Development, the OECD, which looks after the world's top 30 economies, researches them, reported that the world remains in a low growth trap with persistent growth disappointments, weighing on growth expectations and feeding back into weak trade, investment, productivity and wages. The chief economist at the OECD, Catherine Mann, said, action was needed to lift the global economy out of a low growth trap. The spiral is not upwards, it's downwards. Downwards on trade, downwards on productivity, downwards on global growth. Then the big management consultants, McKinsey, more or less at the same time, they also made a projection. More worryingly, long-term growth prospects are serious cause for concern. Annual GDP growth from 2014 to 2064, after I've gone, and some of you too, is projected to effectively halve. So capitalism will no longer be growing at 2% globally, which is pretty pathetic anyway, but will actually be falling below that level as we head towards the middle of this current century. That's the situation which capitalism is in its ability to develop productive forces. Here's world trade. You can see that world trade before the Great Recession was growing at about 5 to 6% a year. The fluctuations are in this time. And then you can see after the Great Recession, it's been growing at 2.7% a year. I actually did a graph yesterday which showed, I haven't got it today, which shows this situation is significantly serious. You can see it's virtually at zero world trade growth at the moment. That means that if one capitalist economy is in difficulty, you cannot expect to export it out of its crisis by devaluing its currency and exporting more. I'd like to consider which country we're thinking of there. And we can see what we now be talking about is not the continual expansion of world trade faster than global growth, the movement of capital into the so-called emerging economies, the exploitation of new labour forces effectively, globalisation, which has taken place over the last 30 years or so. And we can see on the left-hand side how the huge increase in capital inflows into the advanced economies, in this case, and others, demonstrates globalisation. But if you look on the right-hand side, you can see that now that flow is now suddenly dropped sharply. So not only has trade ground virtually to a halt, but global capital flows between the major economies, including the emerging economies, has also dropped to fairly low levels. So globalisation, as measured in this way, is coming to an end. It was the major force that enabled the counteracting factors to dominate in the 1990s, the counteracting factors to the pressure of a drive to a lower profitability, which most of the major economies were suffering in the 1970s and so on. So the national capitalists could gain a higher rate of profit by expanding abroad through trade and by shifting capital abroad. And that also had a multiplier effect of everybody expanding trade and capital flows. That's no longer the case. That has now come to a halt. It's one of the explanations of this lower growth and the inability to get out of this depression. So world trade growth last year was well below the averages that we've seen and continues to go along at least half the rate, less than half the rate, before the global crash. Now, in Marxist economics, at least in my view, employment growth does not depend on population growth, but on the demand for labour by the capitalist sector of the economy. If they don't want to employ us, we don't get work. That's the basis of employment growth. However many people there are, however little they're prepared to accept in pay. Capitalist investment is the determining variable, and employment is the dependent one. So capital accumulation can be positive for employment as investment grows, but it can also be negative because by introducing machines and technology, it also starts to shed labour. Similarly, productivity growth is the flip side of the growth as investment. More investment will generally lead to a higher level of productivity, if not to maybe not to a higher level of employment, certainly not relatively to the investment being made in capital equipment and structures and other measures of non-labour investment by capitalists. Of course, no capitalist will introduce a new technique unless he can make a profit. But the whole point, key point of one of Marx's theory about capitalism, in the drive to expand profit, in the drive to expand productivity and undercut other competing capitalists, there is a tendency for an increase in the amount being spent on machinery and other raw materials rather than labour relatively, and this over time would inevitably lead to a fall in profitability. So each capitalist may get a higher profit by introducing a new technique. As they all introduce it, in fact, they start to lower the profitability of the whole capitalist economy. That is the contradiction between productivity and profitability, which is one of the key Marxist tenets, I would argue, to explain what is going on. Now, we can see here what's happened to the global rate of profit since 1855. Now, that figure has been done by, I like to quote, Esteban Maito from Argentina, who is toiling away in the dark dungeons of the Argentine finance ministry on hardly any money and not much recognition, to look at the question of the global rate of profit. And this is his measure, which I, of course, have appropriated and made famous for myself. And you can see that the profit rate has dropped dramatically from 55% overall, this is an average of 14 countries in 1855, to around about 15% now. And you can see the great neoliberal period when capitalism turned things around on profitability is not much of a turnaround, is it? It stopped falling in the 1980s and rose a bit towards where we are now, but it's really at a relatively low level historically. So Marx's law of the tendency of the rate of profit to fall has backing with this graph here. If I move on to the post-war period, this is my graph, so I can claim it for myself. And you can see we had a golden age, high rate of profit, growth was strong, investment was strong. Then we had the huge fall in profitability, investment fell, production growth rates fell, there was inflation, there was crisis, there was revolutionary movements. Then we had the neoliberal period under Reagan, Thatcher and the rest, globalization, privatization, crushing of the trade unions, to get that amount of increase in the rate of profit. That's what they've achieved by screwing us. Not very successful, really, in turning things around for capitalism, if we're talking about the title of capitalism as it passed its use-by date. I claim that we're in a period now, as I say, of a long depression. You can see what's happened to the profit rate globally of a large number of countries. That's the G20 I've used here, which is relevant to this weekend. And you can see that while they're sitting out there in Hamburg having things thrown at their windows, that their profitability is not looking too great, despite all the efforts that they've made. And at the same time, they've had to dramatically jack up the level of debt that the big capitalist companies have run in order to try and sustain investment and growth. So if I look at the red line, that's the investment that they've achieved from December 2007 to the 2015. Basically, this is the IMF figures, by the way. Global investment, well, it's not really moved much at all. It's more or less where it was 7 or 8 years ago. But debt for companies, not governments, not the terrible public debt that the Tories and the rest moan about. We're talking about company debt here, has continued to rise in the effort to try and sustain profitability and growth. And what we really see is happening is, if you look at the whole long period, if we look at the productive sectors of the capitalist economy, we're taking manufacturing here, for example, whereas in the US, back in the 1950s, manufacturing was about 26-27% of GDP. Now it's under 12%. But the sectors of finance, property, and insurance, called FIRE, finance, insurance, and real estate, Americans like to call it FIRE, the dotted line continues to rise from 12%, which is where manufacturing is now, to 22%. So the US is becoming less of a productive sector economy and more of a rentier finance, unproductive sector of the economy, living off the rest of the world, which is providing the productive sectors. Less growth, more inequality. I'm going to have to speed up because I've hardly started. So you can see that GDP growth, the black lines are where we used to have GDP growth per person. Everything is below that, whether it's in the OECD, the US, the Euro area, or Japan. And on the other side, you can see the massive increase in income inequality for the top 10% and the bottom 10%. The red line is the top 10% on the right-hand side in the OECD, going from the index from 100 up to 135, a 35% increase in the share of household disposable income for them, and for the bottom 10%, real disposable income has moved up no more than 5%. That's over the period of 25 years. So you out there have managed to increase your incomes on average by 5% in the last 25 years. The people you are working for, who you probably don't know their names, have managed to increase wherever they started from, by 35% over that period. And we can see that on the averages. These are other measures. You can see the inequality in the US, a Gini ratio, which is the measure of inequality, won't go into that now, rising high in the US and in the OECD in general. And for the first time in the US, the top 0.1% of wealth holders have as much wealth as the bottom 90%. 0.1% wealth holders have as much wealth as the bottom 90%. And it hasn't always been the case. That's a dramatic transformation that we're seeing there. And the big gap, now the gap here is just I'm showing you on the top line is the productivity that's been achieved since 1990, I think it says there, not 2000. And the bottom of the blue line is how much wages have increased in the developed economies at the same time. So there's a gap developed between the two. Productivity is rising more, wages have been rising less, the wage gap. This is how capitalism is trying to get its profits up, by squeezing wages while trying to boost productivity. But as you've seen in the previous graphs, hasn't been greatly successful. Here's the United Nations measure of the whole world. They have found that just 0.7% of the population have 46% of all the household wealth in the world. And that 1% comes up, when you take it to 1%, it's more than 50% of the world's wealth is held by just 1% of wealth holders. And this will tell you how terrible it is, because there's probably people in this room who are in the 1%. How could that be possible, you're thinking? If my mortgage and all the rest of it, because so many billions and billions of people have no wealth at all. So even the top 10% will conclude quite a lot of people in the UK and the US who have some household wealth, while the vast majority of the world's population here in 2017 have no household wealth. By that we means houses, any cars, and of course not even any sort of financial assets like stocks and shares. And for the first time, the richest, again another moment of record, the richest 1% of wealth holders in the world now have as much as the other 99%, 50%. This is what we see over the past period. However, here's the good news. According to the IMF, we are gaining momentum. The good news is that after these 6 years of disappointing growth, the world economy is gaining momentum as a cyclical recovery holds out the promise of more jobs, higher incomes, and greater prosperity going forward. By the way, every year the IMF has said this. However, maybe they've got more of a case this time. It may be gaining momentum, but we cannot be sure that we're out of the woods. Oh. That was a bit disappointing, the second line. There's no clear downside. There are clear downside risks. Political uncertainty, including in Europe, the sword of protectionism hanging over global trade, the tighter global financial conditions that could trigger disruptive capital outflows from emerging and developing economies. But the economy, underneath those uncertainties, is looking better. Now, this is turning up. Global manufacturing PMI. What the hell is PMI? Purchasing managers indexes. Now, you know those polls we had during the election recently, which we had nearly every day to work out whether Corbyn was catching Theresa or not? Well, people are asked every day what they think. Well, every month, companies around the world are asked by a marketing agency whether they think they're selling more or they're doing better, they're taking on more employment or not. So it's a survey. The Purchasing Managers Index, it is an index of what's happening in the world, what companies think is happening to them. Whether it is actually happening to them depends on the data later on. But they're saying if we look at the red line, we're not looking too great at the beginning of 2016 when I was here last. Now it's way up there at 54 on the right-hand side. Anything above 50 means that the world is growing. Anything, if it goes higher, it means it's growing a bit faster. The blue line is the new orders. That's what these companies think they're going to get in new orders, and they claim that things are picking up as well. So this has got the IMF and other people quite excited. Things are looking better. Here's the Eurozone PMI, which was pretty terrible. Anything under 50 means you're collapsing, you're contracting. This is the Great Recession. It was collapsing even in, as we can see in 2012, the Euro crisis. But now we're in positive territory in the Eurozone. It's now better than some other places that I could name. And US, that's still above 50. Not as great as it was, but it's still above 50. Japan, yes, above 50, 54. Things are looking good. China, even China now, having come out of the doldrums at the beginning of 2016, is now into positive territory. So it appears that things are beginning to turn for the better. Now, I do a measure of the global corporate profits on a regular basis. Me and JP Morgan are the only ones who do it. I don't agree with their version, although actually it turns out to be the same. But I do a weighted average of the corporate profits of 5 countries. A fairly large one, so it gives you a pretty good idea of what might be happening to the world's company profits. And this is a year-on-year growth rate, so you can see things were bad in the Great Recession. They jumped back again, then they sort of crawling along at under 10%, and actually it went negative. Now, I've circled. This is the gaining momentum bit. See? Things are getting better. Maybe it's all over. Maybe capitalism has solved its problems. Oh, this is US corporate profits. Unfortunately, if we look at the red line, which is taking out the financial profits of companies and just looking at companies that are not banks, hedge funds, financial institutions, just, the likes of Apple even, Caterpillar, all the major companies that are not financial companies, insofar as you can regard Apple as not being one, then you can see that we're actually negative. The non-financial sector in the US has still got negative profits. So that's a bit of an if. maybe things aren't so great. And here, this is the growth in margins, the amount of profit that you can squeeze out of each unit of production. Bit of a technical thing. You can see it's dramatically risen over the period of the globalization and neoliberal period. Still didn't produce a much bigger profit rate, but it did improve the profit margins. But you can see at the very top now, it peaked at around, that's 0.12 or 0.13 means 13%. So every unit of production, 13% of profit. This 13% is profit. That's actually now falling back towards 10%. So gaining momentum, but some worries to there. And this is the state of US real business investment growth. Oh, not quite so good, is it? Having recovered from the Great Recession, bouncing along at 5 or 6 for a while. Where is it? This is the very latest figures. It's negative. Business investment is falling in the US. Non-financial corporations' profits are falling in the US, just at the time that the IMF is telling us that everything is gaining momentum, at least in Europe, maybe. This is the UK's profit. That might interest you a bit more, a bit bored with the rest of the world. You can see that the left-hand, the darker red line, which is measured on the left-hand side, you see profits rising for British companies to new highs. This is in cash terms, so it's not in real terms, not taking out inflation, but even so, it's up to 85 billion there. But what about the profit rate, which is the lighter line? You can see it dropped down in the Great Recession. It's recovered, but it's nowhere near where it used to be back at the beginning of this century, at the end of the 1990s. So UK corporations are making profits, but profits compared to what they've had to stock up in investment and employ in labour have not particularly recovered to levels that we've seen before. They're still struggling to get out of this situation. And as a result, that's UK business investment growth. I could have just put the US and UK. It's the same thing virtually. You can see hardly any growth, if at all, in UK business investment. But don't worry, well, now obviously the UK companies are in an excellent position as they look forward to Brexit to be able to turn that around, and we can expect a change. That's the state of US investment after they've replaced existing capital that's got tired. Machines get old and have to be replaced. If you take out the cost of replacing everything, then you can see that the actual increase in new investment is only 2% of the total stock that the US has got. So I'm jumping through a bit here. All I would say is that if we are gaining momentum, there's argument against this, because this is a very long period of recovery that we're already in since 2009. It's now 30 months, in fact, it's more than that now. So it's quite a long period. And this business cycle in most of the advanced economies lasts about 8 to 10 years. We're heading up towards that now. So we can argue that if there's gaining momentum, it's about time, because we're about to come to the end of this cycle, which would mean a new slump. And that would pose a new problem. I have to do something about the UK. Of course, as you can see here, the UK's real wages, this is the figures only out this month, real wages, the orange line, below zero. Real wages, on average, in the UK are now negative. People are getting less money on a year-on-year basis. And because we can see inflation has rocketed up and wages are more or less not moving very much. And according to the Bank of England, this decline and stagnation in real wages in the UK is the worst and longest period of stagnation and fall in 166 years of the UK capitalism. You guys have never had such a bad time compared to all the other workers, even in the dark satanic mills, at least when it comes to wages. And we can see the gap of real wages short of where it was at the peak before the global financial crash. £490 a week, dropped back, there's still a £16 gap. So here we are 8 years later, and that hole has been lost forever. That money will never come back to workers. It's lost forever, and they're still not back to the level that they were in 2008. And we can see that gap showed the trend growth. If wages had carried on where they were in the period between 1961 and 2007 on an average growth rate, that's the trend line, then they would have gone like that. But that's what's happened to wages since the long depression started. the huge gap that's opened up there. Finally, I must deal with, in the last minute, 3 challenges for capitalism. And it's a big one, because at this weekend, amidst the zombies and the Molotov cocktails, Donald and Merkel and the others talking about global warming. Donald says there is none, and that he's not going to do anything about it, and Paris can take a running jump. However, the evidence is ever so clear that not only is global warming a product of the industrial boom that we've seen, industrialization, industrial revolution of the last 150 years and the development of capitalism, but also it's accelerating the rapacious drive by capitalism to boost profits and use fossil fuels, come what may, is driving up the average temperatures in the world dramatically. Here I have a very latest piece of information from Jose Tapia from Drexel University, who's an expert on the subject. Now, I've only got 1 minute, but I should tell you, if you look at the black line with the dots on it, that is the change in carbon emissions every year on an annual basis. And the green line is the annual change in growth, in global growth, world GDP. And what Jose Tapia is saying is the reason carbon emissions accelerate, increase in amount, or don't increase so much, they're always generally increasing, but you can see they don't drop below the red line much, but the pace of increase depends on global growth. Global growth is driving carbon emission growth up. In other words, capitalism's rapacious drive for more profit, more growth, more production, more investment, at whatever expense, is the driver behind carbon emissions. It's not due to some sort of weather phenomenon. It's clearly related to what's happening man-made, and in particular capitalism-made. These are the reasons I would end now on saying why capitalism is questioned about whether it has passed its use-by date. We have low investment growth. We have low productivity growth. Globalization, which is expanding the world to bring the whole world into the realm of capitalism, and also to bring people into urbanization and a free trade and the expansion of use values across the world, has come into an end. Inequality has never been so high since probably the late 19th century, probably earlier than that, and still rising. And we have global warming, a new factor, and climate change, which we've never had before, which threatens the whole environment and development of the planet. And I would argue in the book Long Depression that within a few years, I'll be a bit vague about that because each year I say it's going to happen. And it hasn't quite got there yet, but according to me, it can't be much longer. Maybe next year when you're here, you can throw eggs, or I can raise my hand in triumph to know that you're all in another slump. That'll make me feel a lot better. So these issues remain on the agenda for capitalism, and as far as I can see, if we look down the list, there's none of them that they can solve, whatever the G20 leaders decide today.
So the question is, what is the real difference between the productive and unproductive sectors? Thank you. So, sorry, I should say you'll have about 3 minutes. After 2 minutes, I'll tap this.
I was hoping that I was hoping that my question would be read out because
we didn't say
there's
question
so many
on it.
people here, and I feel a bit embarrassed. But it's very simple. Corbonomics, right, was a revelation because, for once, the Labour Party was not attacked. In fact, there was a consensus amongst economists that they've done really well. They costed their projections and their promises and so on and so forth. The thing with Michael Roberts is that he's been saying, look, Keynesism still has a cost and Keynesianism isn't really the answer because of the global world slump or the recession or the fact that the crisis of profitability. My question to Michael today is, can Corbynomics be delivered? And if so, or rather, when Labour gets into power, will the pressure from corporations, whether in the heavy but political pressure, but the fact that capital can withdraw, and are we heading towards some kind of closed borders because of Brexit and so on? So it's very open and exciting, and I was wondering if Michael can come back on that.
Yeah, I just want to draw out the political implications of the analysis, because it's very stark in lots of ways. What we're being told is that capitalism is in long-term decline, that the solution of the ruling class, the dominant expression of what they do, is austerity. Austerity really hurts people, it gets worse, and it is not a solution for the system, so it's going to continue. That's basically what we're being told. And in lots of ways, that really means we have to up our game, because in some ways it confirms our analysis. If you're a revolutionary, what we're being told is that revolution is really the only solution here. But we unfortunately don't have that's not the dominant narrative. I mean, the last speaker talked about Corbynomics. Corbynomics won't be able to solve the crisis of capitalism, as we've just seen. It doesn't do anything about the tendency for the rate of profit to fall and so on, and it will be under major pressure from the British capitalist class as soon as it was to be enacted. So we really have to, I think very hard about what we're going to do about all of this, because we have to be relating to, our problem is that we're trying to relate to forces that are bigger than us, but that don't have our interpretation of what's going on. So I think we have to be really systematic in communities, winning the confidence of people, knocking on doors, talking about the issues around austerity, working in the trade unions obviously, but also thinking about how we relate to the left of the Labour Party, because there surely are people in that movement who haven't yet come to the conclusion that we have, but that actually do want to change the world. And so we have to really think about, are we going to build those united fronts? Because when the next crisis comes, we have to have credibility. The revolutionary left has to have the credibility to move forces with us, otherwise we could lose them the other way.
Just before Mark speaks, the speaker after Mark will be Heike, and I'm just going to read out another question. Some British financial journalists are suggesting that a subprime type bubble is happening in the British car industry, PCP plans. Are they right? Thank you.
Hi, I'm Mark from Lewisham SWP. I just want to thank Michael for what is, as always when Michael speaks at Marxism, a very insightful talk. Michael said that sometimes economics can come across a bit dry, but I think actually when you connect it to the political consequences that come out of all the graphs and the contradictions embodied in what's going on in the world economy at the moment, you see actually it's not dry, it's the beating heart really of the brutality that we face at the hands of the ruling class. And Michael's right to speak about it being what drives the fossil fuels at the moment. If we see how Theresa May's trying to drive through fracking here in the UK, but it's also the beating heart when they attack. When they're trying to drive up their rate of profit, that's not separate from the £2 a unit that the people that put up that flammable cladding on the outside of the Grenfell Tower were trying to save. This is how they try and solve the problems of their system, by attacking our class. The little bit that you saw that started in the 80s, the sort of 30 years where the rate of profit did a little bit better, it did a little bit better because they came after us. That was what neoliberalism was. It was the ruling class's attack on working people. And what we're seeing now, actually, with people fighting back and looking for alternatives across Europe, is the response to what we've suffered under that attack for 30 years. But I think the comrade that spoke before me is right, that this can't be solved by tweaking around the edges. Michael's right to criticise Keynesian responses. What we need is to get rid of this system that drives the brutality, not to try and moderate it, because that won't do it. It won't cut it. And that's why I would urge people to join a revolutionary party, to join the SWP and help us fight to undermine their system.
Okay, Heike will be followed by Eddie Prevost. I'm just going to read out one more question before you speak. Isn't the growth of fire a result of increasing the rate of exploitation by increasing the proportion of wages taken as rent and interest, i.e. the housing crisis?
Yes, I first of all really want to thank Michael for his work, because I'm Heike. I'm living in Argentina, which is where my research based, and people like us looking at the small scale of things, you know, we live off hunches about the bigger picture, and Michael does a fantastic job pulling together macro data about the global economy and where it is going. It is very, very valuable work. But there are always some small aspects, you know, where perhaps that might get lost looking at that macro picture. And there are a few things, but I want to focus on one of the things that actually also links to your argument in your book about the resolution of the depression. I fully agree with everything about the depression and so on for a long time. But the capitalist resolution of that depression, you sort of make that point in your book that by comparing it to that it's closely comparable to the 19th century depression, which is fair enough. And that it'll trickle on and possibly without a kind of military confrontation necessary, as it did then. But I think that is a slightly wrong take on the crisis. I mean, I think what we need to understand is there are different models of capitalism that are emerging that give rise to these crises. There's history playing part, and it all mark these crises slightly different. So because it's capitalist crisis, depression, what have you, they all have, of course, a lot of aspects that they share. But they also all have their peculiarities. And when you talk about globalization didn't just take place over the last 30 years. It intensified over the last 30 years, of course. But it's always been an aspect of capitalism. And but the intensification, of course, of globalization over the last 30 years doesn't just happen in the economic things. It's pushed by the economic, by economics, by capital. But it also has political and cultural impacts, which is why we are today in a situation where we see where risings happen. They confront similar things. They develop similar, even political and cultural aspects in terms of how they confront the crisis. They have small aspects that are always different in terms of local history and how it plays in. But that's what makes actually global revolution, workers' takeover of the economy, much more likely today than it did in 1917. And also that suggests that if politics has got a role to play, then we also need to recognize that even economics can manage a crisis. What we can learn from Latin America, for example, from Argentina, is a crisis management. They didn't resolve the crisis. That's part of the problem. They didn't resolve it, but they did manage to create, to maneuver the crisis, to maintain certain raise wages and so on and so forth, which also actually helped the struggle in the end today. I mean, there's mass movements going on at the moment. I'll leave it at that.
Thank you.
There's an article in today's Telegraph just precisely about productivity by Andrew Sentence. I'll just read out the last paragraph, and I'd like your comments on it, Michael. What it says, if I can read it, I'm nearly blind. The shift to a more service-orientated economy may limit our scope for boosting productivity growth in the UK, remember. But many of the key levers are in our own hands. We need a much more committed approach to skills development, infrastructure investment, and tax reform. And he does a lot on the tax reform if you read the article. So there's that. But the other thing I'd like to ask you, I sometimes watch RTTV, Max Kaiser, I don't know if any of you watch him, and quite interestingly, he's quite an eccentric person, but nevertheless, he's quite a skilled operator on Wall Street and the rest of it. And he says that what's one issue he deals with there is the rise of Bitcoin and other alternative coins, and their tremendous rise. Also, he said that in the last 15 years, gold has risen on average of to 12% per annum. So I was just wondering what comments you would make and what this tells us about what's going on in the system itself.
It seems that carbon emissions last year have significantly fallen below growth on the graph. Why is this, and will it continue?
Yeah, I just had a question about whether Corbynomics, if Corbyn came into power and tried to implement his programme of social democratic reforms, and we did go into a crisis, would that be able to? I think a lot of people have asked this before, but would that be able to resolve or solve the crisis, or could it do what happened in America in the 1930s? Because a lot of people talk about the New Deal, but America went into an even deeper slump in 1937 when there were... America in the 1930s, Roosevelt tried a very soft, not very hard form of Keynesianism reforms, but it didn't work. It led to an even deeper slump in 1937, which only America and the West came out of because of the Second World War. So if the system goes into crisis and Corbyn comes into power, what would happen in that situation if he tried to introduce reforms in it and it failed? Because it's not necessarily going to go to the left, it could go to the right, it could lead to demoralisation. And I just had a question. I work in insurance, so is insurance unproductive? Because where I work, it's like a factory line. It is like a satanic mill of the 21st century, and it does feel a bit like we're being pumped for surplus value. But are we not productive? Are pensions and insurance and finance not productive? If we could have an explanation of, because there's a lot of people who work. Most of Norwich is insurance, so maybe we're all really unproductive. Anyway, I'll finish off. Thank you.
Okay, Patrick will be followed by Joseph Chinara.
It's a completely insane system that's driven by the capitalists to accumulate more and more, wanting to increase the rate of productivity to increase profit, that they accumulate so much capital, right, that when they do their mathematics to see whether it was worthwhile, they see the rate of profit declining. It's the irrationality of capitalism, where its ability to produce actually takes away from the rest of it, sends it into crisis, and as Michael has pointed out, deepening and worsening crisis. We need to remember that this system has, in the past, succeeded in getting itself out of the crisis of the overaccumulated capital, which Marx called or expressed in the organic rate of capital, that it was able to destroy massive quantities of capital to restore the profit rate, and that was accomplished through World War. We need to be very mindful that as we see today, the growing nationalism, the agendas of certainly those of Trump and all the corporations and the military-industrial complex would be happy to enter into a militarized period, and that they would look longingly back on the results of our previous world wars, that they may see this as the way out. This makes our task all the more urgent, because they do have a plan, and we don't want any part of it.
Yeah, the previous speaker touched on a very important question, which is how they get out of crisis. Because crisis tends to end when unprofitable firms and unprofitable capital is destroyed or devalued in some way. And so the traditional dilemma the ruling class face is, do they let the crisis rip in the hope that enough companies will go under that they'll be able to bounce back at some point, or do they bail out failing firms and keep them ticking over? And the way that dilemma plays out today is different to in previous crises. To a very large extent, that's mediated through the financial system of capitalism. So if you think about the key things the ruling class have done to bail out the system since 2008, it's quantitative easing and it's ultra-low interest rates. What does that do? It means, for one thing, we have this massive of credit that builds up on a global scale, which helps to drive the economy forwards. And secondly, it means that the recovery is extremely unstable, extremely fragile. And we're now reaching a point in the recovery where the ruling class are beginning to talk about weaning the system off the life support system that it's been on. They're starting to raise interest rates and winding down quantitative easing. It's an extraordinarily dangerous moment for the ruling class. If you look at bankruptcy rates and bond defaults, after 2008, 2009, they went down to a very, very low level. From 2016, bankruptcy in the US and global bond defaults start rising very, very sharply. This is a moment of potential crisis for the ruling class, and it's a moment of enormous risk and instability. Final point I want to make, what do we do about all this? You see, I welcome Corbynomics. I think it's a breath of fresh air. But we have to understand when we talk about these Keynesian measures, there's always two ways of looking at Keynesianism. Is it a system of demands to bail out the capitalist system implemented from the top down by government? Or is it a system of demands that working class people fight for and in achieving increase their confidence, combativity, ability to organise and ability to protect those demands? We have to go for the latter. We have to start fighting now, and we don't say to people, wait for Corbyn. It's part of the fight against Theresa May to demand these things as a working class movement. And I'll say something else about that just very briefly. You see, imagine the most rosy scenario. Corbyn gets in, implements this massive wave of reforms and starts to encroach on private capital. Do we seriously think the response from the ruling class in Britain will be any more generous than the response to Syriza in Greece? Do we really think they'll give up their wealth and power without a fight? And if not, we need to have a network of socialists in every community, every workplace, every university who say we're going to take the struggle forwards, we're going to bind the struggles together, we're going to keep pushing, and we're going to wrest these demands from the capitalist class, whether they like it or not, and we're going to organise to protect those demands. And ultimately, to do that, we need an organisation that isn't bound to the idea of running capitalism, but is committed ultimately to its overthrow. That's why we need a socialist organisation in every community, and it's why you should join the Socialist Workers' Party.
Very hard to follow that. I was reading a book by Anwar Sheikh recently, his new book, Competition, Conflict, Crisis and Capitalism. Yeah, 6 months. And there's a really good chapter in chapter 11, and it's based on interest rates. Oh, sorry, it's exchange rates. But what he argues is that, you know, the neoclassical ideal of how international trade works is that you have a balance of trade, regardless of how powerful that capitalist country is in exchanging with another, let's say, weaker capitalist. There's always going to be a balance of trade. But the great thing about Anwar Sheikh does is that he rubbishes this. And what he says is that basically what happens between a more powerful country, let's say Germany and Ireland, there's a good relationship in this, in that Germany has more regulating capital at its centre, and as a result, it creates a liquidity mismatch, and that creates a differential interest rate. And investors in Germany will invest in Ireland, but the bond yield will increase, but this creates further indebtedness. So if you look at the Eurozone and this idea of, you know, we're going to get rid of the debt, this is one of the ways to do it, particularly with austerity or whatever. In fact, some of those measures that they're actually deploying is further indebtening the periphery. And that's a fundamental contradiction, particularly if you begin to look at that on a wider scale, look at Africa and the subcontinent or whatever. And this shows, following on from what Joseph was saying, is that their solutions to the crisis it's rubbish. It's not working. Right, and like no matter how sharp they come about, you know, all these professors when they're introduced on the TV, if you look at their measures, they are not working. They're fundamentally not working, and this shows a necessity by the left to not only offer a solution but capture political spaces in order to drive forward a tangible and credible solution that puts people before profit. Thank you.
Well, everybody, of course, I'm going to be able to answer every single question in detail, develop the whole process so you can round it off and see exactly where you're going. But instead, what you're going to get is a bitty sort of reply with things missed, and those who have not been answered will have to wait till next year. But let me first say on the question of productive and unproductive labour, I think it's an important question because particularly in the advanced economies, the majority of people at work are not working, as we've seen, in manufacturing or in mining or in various material production, which is regarded both by mainstream economics and by Marxist economics as being productive sectors. But that's not really Marx's definition of productive and unproductive labour. So I'd like, first of all, to say, on one side, in a way, if we're all contributing to the development of the resources of a nation or of the world in order that it can meet the needs of population, then everybody's productive. In that sense, they all have a level of addition to the values and uses that we need, or use value. But from a capitalist point of view, what's productive is whether it creates more profit, whether it creates surplus value over and above the cost of the wages of those workers employed. Now, from the point of view of the capitalists then, a large number of you out there are totally unproductive. That includes myself, that includes the insurance guy, that includes every public sector worker, including firemen. Really, they're not much good in terms of creating extra surplus value. They might put fires out, but really we could let them burn and perhaps get more profit another way. So when you see it that way, you can see that it also exposes the contradiction in the capitalist process of production between productive and unproductive. Marxist economists argue about exactly whether somebody is creating surplus value or not. But the gist of it is, as far as I'm concerned, is that basically what we call FIRE, finance, insurance, real estate, the whole of the government and state sector, except that getting oil out of the sea if it happens to be a state company or something like that, that's a whole unproductive sector. That is a cost to capitalist profit. It's a necessary cost because we have to have, if I'm a capitalist, we have to have you sufficiently healthy to go to work, sufficiently educated to use the machinery or make a decision and that sort, and sufficiently awake so that you can be used to exploit. So it's a cost, it's a necessary cost, but that spending is really unproductive. So it explains austerity very well, doesn't it? It tells you why you have austerity. If capitalists' profitability is falling, if there's a crisis for capitalist production and its profits, then it looks to cut costs. And one of the key costs is the unproductive sector, the state sector, which, as far as they're concerned, is a necessary spending, sometimes forced upon them, and they wouldn't like to have that. Let's not have apprenticeships. Let's just let people casual labour. Let's have precarious contract relationships. Down the road, you could say that's bad news for productivity, which it clearly is, because it doesn't create trained and efficient workers. While Germany, for example, keeps on with its apprenticeships, produces higher productivity, better growth. It's more efficient. But capitalists who want to drive up profit, perhaps in the short term, in a crisis, will look to cut away all those unnecessary costs as they see them that have been forced upon them. So that distinction is a key factor. There's a key contradiction in capitalism between the productive and unproductive workers. And I think if you think of it that way, then you can realise, if you happen to be a teacher or a nurse, that basically you're unproductive for capitalism. Of course, you're productive to all of us because you provide a service and a use that we all need, but that is not what capitalism's purpose is. Capitalism's purpose is to produce for profit, not for what people need. There's a difference between producing to make more money and producing to make things and services that people need. It's a fundamental contradiction, and that lies the explanation that Marx provides between productive and unproductive labour. Now, some comments have also mentioned a range of questions about the huge boost of credit. Joseph was pointing out the huge boost in credit to try and keep the world economy going, or the major economies going after the Great Recession. It's had limited success in boosting growth or on investment. It's had a huge success in boosting the prices of the stock market, bonds, and all other financial assets have rocketed up every day. If you happen to read or watch any of the business channels or anything, every day, new record high for the S&P 500, which is the index of the US economy for the top 500 companies. Their prices is indexed, or the FTSE 100 reaches a new high. So the price, the stock market price of companies is bouncing to new highs all the time. And yet, growth is relatively low, investment, as we've seen, is flat, profits, although they've improved, still remain relatively low compared to where they were before the Great Recession started. So there's a big gap between this fictitious capital, the value created by the stock market and its prices, and the reality in terms of what's available in real value for capitalism, in the surplus value, crystallized into the stock that they've got to produce things for profit. And that contradiction is continually developing at the moment, so bubbles arise. Now, all sorts of bubbles, cryptocurrencies or bitcoins, and there's all kinds of other ways of people trying to make money out of money. Literally, in this case, they invent a new form of money and ask you to buy it. So you can go and tomorrow, if you get your smartphone up, you can go to a site and you can buy and sell a cryptocurrency, whether it's a Bitcoin, but you're not actually. What you're doing is you're trusting that this money will actually be converted into some sort of money that you can use, or a thing you can use down the road. So it's a trust thing. People are trying to invent a new currency, and it's become a bubble, really. This currency has been invented to avoid the banks and avoid existing currencies, and also to make money out of you by you wanting to bet on it. It's another little scheme to get people. Used to be tulips in 1620. Now it's bitcoins, and we'll have more of those. The argument that we're about to have a huge bubble in the car industry, because as I'm sure you know, is that now nobody buys a new car. What they do is they take out a lease, so much initial payment, and then they pay per month. So you have this scheme, and then after, say, 2 or 3 years, you either hand the car back or you take out a new contract. So what's happening is that all the car companies, to get you to sell it, are actually providing a sort of credit system by which people can buy new cars. What's happened, of course, is that when they get the car back, they find nobody wants that. Second-hand car market has dived. Apparently, now that the biggest success of Brexit, by the way, is that second-hand cars in Britain are so cheap that the Irish are coming over, buying them, the car dealers in Ireland, taking them back to Ireland and flogging them in euros and making a huge profit. But this, I don't think, is really a credit bubble that we have to consider the proportions we saw in the housing crisis of 2000. But it's another indication of the whole process of driving up fictitious capital to try and create a market, trying to get production going. I have to finish because I want to make 2 minutes. I can't possibly deal with the 19th century depression. I can't deal with Argentina and Venezuela. All I would say is that Keynesianism in Argentina was lucky, as was Venezuela lucky, in the huge boost of the commodity prices in oil and so on. And when that came to an end, the solution of remaining within a capitalist system but applying measures to increase the conditions of working people could no longer be sustained. And the opposite took place with the depression and the collapse of many of those gains. And we see now the terrible situation in Venezuela as a result of a failure to go beyond just the measures of expanding the needs of working people and using the Petrobras and the other resources of oil revenues to boost working people's conditions. But when that money disappears, when the oil price collapses, when the commodity price collapses, then the opposite happens. Because we're in a world economy. No one country can be transformed into something that meets the people's needs without it being taken beyond that one country, because we're in an economy where everything is connected together, unevenly, as Anwar Shaikh has pointed out, but nevertheless combined together in such a way that no one country, not even the United States, can achieve the sort of needs that we need for the whole of the population and sustain it without expanding it beyond the boundaries of just one country. And that's particularly the case, obviously, for a country like Greece or Venezuela. And it will apply also to the UK. In my view, the step forward of a Corbyn-led Labour government with the program that was outlined in the manifesto on its economic points could only lead to an improvement in the general conditions of working people if applied. Better conditions across the board. I don't need to spell those things that were put in the manifesto out if they can be implemented. In a period of growth and expansion, even just in the UK, if the UK was growing at 4 or 5%, that would be more than affordable. Probably could be managed. I think actually if the world was growing at 5 or 6% evenly across, we could meet many of the needs of the world's population, including ending poverty. There's only one country in the world that's maintained 6 to 7, 8, 9 or 10% a year growth. And what has it done? It's taken 600 million people out of poverty over the period that's done that. So the expansion of the productive forces to meet the needs of people can be done if you can get that growth. But British capitalism is not going to grow at 4 or 5 or 6%. So when we have a Corbyn-led government, it's going to face the difficulty of trying to carry out that programme, on the one hand, under tremendous pressure from the anti-labour forces, from big business, not only inside the UK, but also outside, because remember we're talking about the City of London and finance capital, and the pressure that's going to be placed upon a government. But also, we have to consider, this is the worst thing about it, is that even if there was some growth, it would be very difficult to see that being sustained for any length of time without going further and replacing capitalism altogether. But we could well be in a position of a generalised economic recession again in the next couple of years. And if that happens, more than likely, it would bring a Labour government to power, but it would be a Labour government immediately in crisis. And that applies across the world. If we have another slump, it's going to be a major political crisis, and what happens after that will decide the issue. I'll just finish on this point, Chair. There is no permanent crisis for capitalism. If workers don't organise to replace capitalism, then they will create the conditions by which they can re-establish some level of profitability and continue the process of exploitation. It won't disappear if workers are unable to change it. In fact, then we are faced with perhaps something even worse down the road. So it becomes an issue politically at the end of the day. We can have as many graphs as we like, but as you know in this room, it comes down to political action, which will actually change the way those graphs are going.